All right. Let me see. Okay. Hello. All right. Hello, John. Hello, Peter. How are you doing, sir? Good day. Hello, Brian. Hello, Caesar. Thank you, Pramin. Thank you, sir. Hello, Ismail. Hello, from the Dominican Republic. Love to see it. Love to see it. Very nice. You're from Poland. All right. Life's good when R is live. Love to hear it. Love to hear it. Hello, Tony. Hello, Murphy Jr. How are you doing? I nearly watched your A to Z guide. Love to see it, Husan. Love to see it. I hope you do find value in it. Of course, feel free to let me know. New timings, yes. 1 hour earlier. 1 hour earlier. At least for me, it's 1 hour earlier right now. Let's see. Dex, if the if there's a fair value area and within that is the first fair value gap, I would always wait ideally for that fair value gap within that fair value area to trade into, to then potentially continue lower, continue higher. From my experience, what I've noticed, if you have a fair value area, within that fair value area, there's a fair value gap, and that's the only fair value gap. It tends to trade back into the fair value gap to then continue higher or lower. If that makes sense. The overlapping part. No harsh arts. No, premium discount is not necessarily relevant to validate fair value gaps. You can use it, but for me, I personally don't use it. No. Because the fair value gap in itself, at its core, is already a PD array, which stands for premium and discount array. So a fair value gap in itself already offers short-term discount and short-term premium, if we try back into it. That makes sense. Our past funded account just by watching YouTube live videos only. Love to see it. Love to hear it. All credits to you, my friend. All credits to you. Keep the focus. Yeah, also on the higher chart frame, Dex. Yeah. All February, I was at the MMT. It's amazing. Simply, basically, I love to hear it. I can't pronounce your name, but love to hear it. It's been a while, Prezzo. Yeah, it's been a while since I've seen you here. Beautiful day over there. Yep, for sure. Day is still early, but always a beautiful day here. Always a beautiful day. Every day is beautiful. Made some great profit this week. Thank you. It's all credits to you, my friend Martin. All credits to you. There was some great price action actually. Throughout the week, there was really interesting price action. Actually, we can go over that as well. But I also caught a trade. Very interesting. But for example, I don't know if people saw US dollar CHF, which we'll dive into. But US dollar CHF was very, very textbook. Very textbook. America's always sunny. That's true, John. It's true. Thank you, Adnan. Thank you. I don't use that, my friend. Also watching the Zero to Hero, it's amazing. Love to hear Percy. We added Zero to Hero as well for the people that are not aware. We added Zero to Hero to Light as well. Actually, let me show you because we did quite a few things actually. Let me see. So in recent times, the MMT has changed a little bit overall. Let me show you. Changes in the sense we are always adding things, adding new things, etc. Potentially removing a few things that are irrelevant at that moment in time. Let me show you. Let's see. So for example, right here, this is an email I sent out the other day to people in the newsletter as well. For both light and masterclass, we have a new dashboard, which I'm very happy with as well, right here. Which we've gotten some great feedback about. The dashboard. The dashboard is very, very clean in my opinion. It looks very, very, very sleek. Then order flow module as well for both light and masterclass. Candle signs module, roadmaps as well. Actually, in April, there is an iOS and an Android app coming as well for the MMT, which I'm very happy with. So you can just do everything on your phone. Then for light, zero to hero modules we added. This is essentially a module that goes from A to Z on everything. It's the most recent big one, if that makes sense, which was already in the masterclass. Masterclass psychology live sessions actually with an expert as well, bi-weekly training plan module where I take you with me on how to form a training plan, make profitable live accounts and live trades. Updated funded account as well, a funded guide, sorry. 2025 module also expected in April, the 2025 module right there, which is where we're going to go over every single little tiny detail again that we can go over. Very interesting. Very interesting. Let's see, let me remove this one. Okay, let's see what we have. I would like to, John. I would like to play again. I would like to start playing basketball again. But at this moment in time, no. No. This moment in time, no. No. It was a nice week. It was a nice week. Let's dive into it, actually. Let's dive into it. I never check open interest. No, never. Never. I personally don't. I have used it in the past. Same as commitment of traders reports. But I, this moment in time, don't use it anymore. No. Good morning. Good morning. For sure, Deepak. That's for sure. For sure. We can do that. We can do that. Let me actually... Let me see. It's a good one, actually, Deepak. It's a good one. We can do that. All right, let's dive into it. First of all, economic calendar right here. What are we doing? Economic calendar right here. For next week, it's looking very calm. Now, of course, we have US dollar CPI right there. So the beginning of the week for myself is not going to be that interesting. I'm mainly going to look at, for example, a Thursday and a Friday, Wednesday as well, after 8:30. So after we've already had CPI as well. But at the beginning of the week right there doesn't necessarily look that interesting to me right here. And the reason why is Monday doesn't have any news. Again, keep in mind daylight saving time as well. But if you just have your trading view time to New York time, then you're going to be fine. For Tuesday, we have US dollar news, yes, but we have CPI on Wednesday. So Tuesday is in that CPI territory where we can potentially create a consolidation as well. So keep that in mind right there. So for me, this week, I'm going into it with quite low expectations overall. Not necessarily looking, not necessarily going into it with I think we're going to have great price action or whatsoever. Because even for the crosses, what we can see is that we almost have no news. GBP on Friday, Canadian dollar on Wednesday right there, Euro on Wednesday, but even that, it's very minimal. So go into it with low expectations, I would argue. That is quite important to understand. Next to that, let's see right here. Let's go over the dollar first. Let's also understand what happened last week and let's build onto that story. So last week, if you remember the forecast, and you can also watch it back if you want to, I was talking about potentially continuing higher from this daily fair value gap and from this, or from this 4-hour value gap right there potentially. Now, what we see, none of those things happened. And afterwards, on Monday, we already got very fast an idea of what the dollar wanted to do instead. So instead what happened is we got such an aggressive rejection on that Monday that we were still respecting this swing high. So in other words, potentially sweeping it. On the 4 hour, you can see this very clearly. When we trade back into this daily fair value gap, we have the 2 candle rejection in motion right here. This 2 candle rejection at first is holding essentially. First candle is not rejection. Second candle can sweep the previous candle low to then potentially continue higher. We run into a bearish 4 hour value gap, which we respect. We take out the rejection low right here, which tells us that we are disrespecting this daily fair value gap right here. And we are aggressively moving lower right there. As soon as that happened in MMT, we reacted because we understood, okay, well, we're wrong on the initial ID. Let's take a look at what we can target. And what do we still have? We still have this clear monthly fair value gap that we can continue lower towards. And that eventually, throughout the remainder of that week, actually gave some very interesting price action right there to continue lower towards the monthly fair value gap as well. Currently, at this moment in time, at least, it does not seem like we are respecting the monthly fair value gap. So my first initial reaction would be, can we still somewhat continue lower towards, for example, this low right here? Now, we could create a weekly fair value gap right here, because we are in the third candle as well, so take that into account. I would first look at the daily fair value gaps though, and see if we can create somewhat of a rejection from daily fair value gaps to potentially continue lower towards these lower targets right there as well. That's my first, what I would first want to look at right there. Again, what is also important to understand, I am most likely for the dollar not going to get involved ahead of CPI. When that's the case, when you're not getting involved ahead of a big 3 news event, then a big 3 news event is going to determine a lot on what the market is going to do. So Wednesday is going to be important for reacting. So seeing where we are at, etc., and then seeing if we truly want to continue lower according to CPI or if we still want to continue higher, etc., So if you're not going to get involved, it's arguably better to just touch some grass for the coming days, wait for Wednesday, let CPI show its hand, and then potentially look to get involved afterwards, if that makes sense. Okay, let's see. On the indices, what do we have? Indices is simply, or are simply right here, continuing lower. But there's one thing that really stands out to me on the indices, and that is that we're not convincingly moving lower. So what I mean by that is we are continuing lower. That's a fact, of course. But it does not seem like we truly are very easily moving lower. And what I mean by that is that we're struggling to create fair value gaps. We consistently have deep retracements, etc. We consistently have some long wicks at the bottom right there, showing that we are respecting discount arrays. It's not very convincing that we are moving lower. So for me, I wouldn't be surprised if we do start to take over these premium arrays right there, start to respect these bullish fair value gaps, then we can still look to target an all-time high right there. That's something, again, there's nothing confirmed just yet, but since we are struggling so much to continue lower right there, I do think that is a potential possibility for coming weeks and months, etc. For NASDAQ, that's very similar, but in the meantime, again, until that is proven that we potentially want to continue higher, we are simply just moving lower. So if we can find a clear premium rate to continue lower from, could potentially be interesting to continue lower as well. But again, I really want to start paying attention right here to the fact that if we do start running these highs, start to create bullish fair value gaps right here, that we might be looking to target as well a new all-time high, which is quite important. First, of course, we have this weekly fair value gap that we will run into first right there. YM overall, quite similar, where yes, we are moving lower. It's what we call in the MMT a consolidating trend. And a consolidating trend is essentially still a trend. That's hence the name consolidating trend. So it's still moving higher or lower, but it's not moving higher or lower consistently. And that is the problem. And well, it's to a certain degree, it's a problem. And the reason why to a certain degree it's a problem is because price loses a lot of accuracy right there. It's quite close to overall consolidation right there, which is quite important to understand. So for me, right here, I would also want to be careful. For example, if the 1 hour right here, the 1 hour value gap can simply follow through right there, could be quite interesting to actually start looking at longs in my opinion. But let's wait and see. Time will tell, and also don't force an idea right there, I would say. DAX right here, simply coming from an all-time high. Whenever we are close to an all-time high or coming from an all-time high, again, I don't really want to do anything at this moment in time. I would like to take a step back. Okay, so on the majors, we actually had quite some interesting price action last week, in the past week. For example, US dollar CHF is the first one I'll show you, this was very textbook, super textbook price action. You're not going to get any better price action than this, to be honest. Daily fair value gap right there, daily context right here. Then on the 15-minute, you had a beautiful 15-minute ST plus a RE right there. And every single order flow lag right there held perfectly for an opportunity to potentially get involved to target that low right there. Was very, very textbook price action right there. Was extremely textbook. Overall, let's first go back to Australian dollar, US dollar. Australian dollar, US dollar in the past week was not necessarily that interesting. And the reason why is because you need to understand from a perspective of, you need to simply understand which currencies are stronger and weaker. And what I mean by that is, if you are looking to trade the majors, you need to understand that if we are looking at higher prices on Australian dollar, US dollar, EU, GU, New Zealand dollar, US dollar, then we are looking to potentially buy them. So that means that within Australian dollar, US dollar, EU, GU, etc., we need to understand which one is stronger. If we want to buy, we want to find the strongest pair right there to buy, because it will have the easiest path to move higher towards our take profit overall. So you need to understand which currencies relatively seen to the dollar are stronger and weaker. If you take a look at Australian dollar, US dollar, and the way we can tell this is quite simply due to the fact right here, if we take a look at Australian dollar, US dollar, we see a bearish fair value gap right there. And a lot of bearish fair value gaps actually being created right there. We overall struggle initially to push higher right here. If you compare it to EU right here, EU had no problems pushing higher whatsoever. So with a very bearish dollar, aggressive bearish dollar right there, EU reflected that. EU was also very strong and very aggressively moving higher right there. Australian dollar was not the case, because Australian dollar is arguably even weaker at this moment in time than the US dollar. So what that means is that when two currencies are equally as weak, that means it's quite 50-50. So one currency needs to be super weak in order to make a significant move. Otherwise, they're too close to each other in weakness, if that makes sense. So for example, even when the dollar was aggressively moving lower right here, Australian dollar, US dollar only reflected that with this move right here. So the dollar needed to be very, very weak in order for the Australian dollar to actually make somewhat of a move higher right there. This tells us that this currency Australian dollar is arguably even weaker than the US dollar, which is not good. You don't want to get involved on that. So instead, you want to look at EU and GU right here, which look at the 4-hour value gaps. At the beginning of the week right here, what do we see? We have this fair value area, exactly actually what we talked about in that video prior to this week. So what is it, last Sunday? We see right here that we create this rejection, offer for value, try to potentially continue lower from it. Instead, fail to do so, take out this high, create a bullish fair value gap. What is this? Unusual context that we talked about in the video. So we're targeting the fair value area high potentially right there. Okay, happened very early on the week, on Monday right there, even Sunday, a little bit overlapping. Afterwards, we respect every single fair value gap that we have a sting into on the 4-hour right here to continue higher. That's overall beautiful price action to continue higher right there. And this is quite important, because if you were to trade EU or AU, EU, you might have taken a couple of winners. AU right there, you might have taken a couple of break-evens or losses, etc., simply by picking and choosing the wrong pair to trade. That's quite important. A small detail, which is very important. Okay, so overall, Australian dollar, US dollar can continue higher, but this to me is not that interesting. I would rather look at EU or, for example, GU right here, which has daily fair value gaps right there that we can potentially continue higher from. Again, keep in mind CPI right there. Also very important. If we do create a consolidation, also keep in mind and make a mental note of the fact that we are on the third candle of a weekly fair value gap right there as well. Very important to understand that we might create a consolidation and the price action might not be great overall. New Zealand dollar, US dollar, very similar to Australian dollar, US dollar, so also not that interesting right here. US dollar, Canadian dollar, also very similar. So look at the time where the dollar moved lower, right here, aggressively. It's not reflected on the US dollar, Canadian dollar, right here. So that means Canadian dollar is, again, arguably just as weak, if not weaker, than the US dollar. That is quite important to understand right there, because that means that this is also not an interesting trade. And that leads to consolidations, that leads to deep retracements, less accuracy, etc., etc. Price action you essentially want to avoid, simply said. US dollar CHF is what we just talked about right here, where we created this daily value gap to continue lower from, right there. Very textbook, beautiful price action, in all honesty. Overall, US dollar, Canadian dollar, we can, CHF, sorry, we can continue lower towards this target right there. First as well, of course, the previous week low right there. Let's see. Daily reaching a daily value gap. I would first want to pay attention, see if we can on Monday potentially create a daily value gap right there to then continue lower from later on in the week as well. That could potentially be quite interesting. Looking at these lower targets right here that we have. All right, US dollar JPY right here. Also overall would like to continue lower. We are running into a weekly value gap, which of course is some resistance. So I want to monitor this daily value gap right here. Not necessarily looking to trade from it immediately, but if we get proper confirmation to continue lower right there, and we can target this low right here, that could overall be quite interesting. But again, make sure you get really good confirmation, because we are currently having quite a large respect and also some disturbance in momentum going against our potential trade ID, if that makes sense. All right, gold right here, gold. So what we discussed last week is that we potentially are looking at a retracement back into this monthly fair value gap right there to then potentially continue higher. Now, this is at this moment in time not the case. So right here, what happens instead is that we are still respecting the weekly value gap right there. And what we actually see is that we have this daily value gap, which we can potentially continue lower from right there. We overtake it, so 2 candle rejection fails from it. Instead, we start to look to continue higher already towards a potential new all-time high. In the meantime, we consolidate a lot right here. So what I would simply want to wait for, if you go into the 1 hour right here, start looking at these bullish value gaps right there to already continue higher, running these highs. So what you'll notice is that we're constantly sweeping highs, constantly sweeping lows. It's the characteristic of a consolidation. What I want to see is that we run these highs with fair value gaps to then continue higher from it towards new all-time highs. That would be ideal, in my opinion. All right, silver. Let's see. Silver to me is not that interesting, and the reason why is because it's been a lot weaker overall than gold. So to me, you could potentially look to get involved also in longs right there, but to me, I would rather look at gold, if that makes sense. Bitcoin had some interesting price action overall. Let's break it down a little bit. So overall, what are we doing? And what did we talk about last week is that we are potentially running this low right here to potentially continue lower. Sorry, crypto holders, towards 74K. I dearly hope I'm wrong for you, for everyone holding Bitcoin. So that is what I think can happen at this moment in time. Now, what we saw on that Sunday is that we got an aggressive rejection, but that rejection got immediately eliminated to a certain degree by having this rejection and failing to create the bullish value gap. So telling us that we are rejecting from the fair value area right here, offering fair value, and simply continuing lower again. Currently, what we see is that we struggle a little bit. Again, typical Bitcoin consolidation. But overall, we are, again, continuing lower at this moment in time, potentially towards this low right here, and then potentially towards 73,000 right there, which is a bigger weekly fair value area sitting right there as well, which we can continue lower towards, in my opinion, at this moment in time. All right, crude oil. Crude oil right here, not that interesting to me. Very simply said. So I would rather wait right here, just wait and see, be on the sidelines. But to me, it's not that interesting right here. Don't really want to force a trade ID or anything like that. Bank Nifty also, to me, at this moment in time, not that interesting. Overall, it's just looking like a consolidation. I do think we could potentially see lower prices right here and could simply continue lower, still towards this target right here at the bottom, which is the swing low that we have towards the left right there as well. All right, then I'll show you, because the question is going to come. I can feel it. I'll show you my trade ID and the trade that I took on Canadian dollar JPY as well. So I told everyone on the forecast, on the YouTube forecast right here, I was mostly interested in the JPY pairs and heading into the week, heading into this current week, last week, if that makes sense. And the reason why is because the JPY pairs were the most ready, in my opinion. They were the most ready to potentially look to get involved. So JPY, what we saw is they were very bearish right here. For example, Canadian dollar JPY was very bearish as well. We had initially this target, afterwards also this lower target right there. So what we see right here is that we have this daily fair value gap, which we try to push lower from, failed to do so initially. Now, what we then see is that we are sweeping highs. So again, if we don't have any fair value gaps to continue lower from, then what can we potentially continue lower from? We can potentially continue lower from swing highs, so liquidity. And also what we can do is, I sent out a newsletter on this the other day, this week. We can use resistance as our narrative area. So that's exactly what I did right here. If you go into the 15-minute time frame right here, understanding that this is our main target right here, you could also argue, of course, that this is our main target right there as well. Then what do we see? What is this right here? What is this? The high that we are potentially sweeping. This on the 15-minute is what? It's a fair value area. So if we are going to continue higher, then we are very likely to retrace back into the fair value area to then continue higher from it right there. Offering fair value to then continue higher from it. Again, it's a most recent video that I made on YouTube right here. Now, if we are not offering fair value, then what is the market doing? It's seeking liquidity. So right here, this is a liquidity right there. But if we're reaching that target, we're also very likely to create a dominoes effect. So we are going to reach this target and also very likely to reach the next targets right there that we have. So how do we know if we are offering fair value or seeking liquidity? Well, right here, when we retrace back into it, we try to push higher. It's the same pattern over and over and over and over again. If a fair value area fails, then we try to push higher from it right there. So we have a rejection, an initial rejection. This fair value gap is not necessarily where I would like to get involved. No. But once we now fill this rejection, so we take out the rejection low right there, and this right here is where my entry was to then continue lower. Targeting overall a 1 to 2 right there. Now the rejection has failed, so we're not offering fair value anymore. So why are we creating a deep retracement? Because we are seeking liquidity in the form of that low and in the form of that low right there. This is where I use an opposing PD ray, so resistance essentially, as my narrative area to look for an entry right there, if that makes sense. And it's essentially unusual context, fair value area failing, etc., if that makes sense. All right, let's see. Hello, Josiah, how are you doing, sir? How are you doing? No, I don't speak Hindi, my friends, I'm sorry. Good retracements and bad retracements. So there's only really two things. Good retracements or bad retracements back into fair value gaps or any PD rays can be summed up quite easily. And what I mean by that is when you are looking for price to go higher. Let me draw this. I'm going to draw this right here. Okay. When you are looking for price to continue higher, then what are you looking for? You want price to continue higher. So you're looking to buy, essentially. So if you are looking to trade from a bullish fair value gap, then you are wanting to see price continue higher from the bullish fair value gap. So what is the one thing, very logically speaking, what is the one thing that you don't want to see? Is that price continues lower instead. Okay, so if we want price to continue higher and we don't want price to continue lower, then all we have to do is look for signs as to why price might want to continue lower instead. So that sounds very simple, and it quite is, because we can make it objective. And the way we can make it objective is if you take a look at the market right here, then there are signs. All you have to pay attention to, essentially, when you are taking a trade is see if there are signs of price wants to do the opposite of what you expect it to do. So for example, what I mean by that, let's see if we can find sort of a good example. Well, this is a good example right here. You have this daily bearish fair value gap. So you want price to continue lower from that bearish fair value gap. So what you want to do is pay attention to signs as to why that might not happen. But what is a sign that we might not want to continue lower from this daily fair value gap? That's because we are sweeping this low. We are having an aggressive wick at the bottom right there. So there's potential bullish momentum in the market at that moment in time. Now, if you compare that to, for example, let's see if we can find somewhat of an example right here. If you compare that to this right here, to this fair value gap right there. This fair value gap does not have that aggressive wick like we saw at the bottom from this other fair value gap right there. In other words, there is less likely a bullish argument in the making. So when there's no bullish argument in the making right there, then we're more likely to continue lower. So it's essentially quite, to a certain degree, quite simple, where if you want to look at higher prices or lower prices, then look for opposing signs. Don't look for signs that are in your favor. Look for signs that might tell you why this trade might not work out, if that makes sense. A lot of people tend to look for, okay, well, what can I find in my favor of my trade? And that's, to a certain degree, don't get me wrong, that's not bad or anything like that. But don't get blinded by it, because the way you get blinded by it is by only looking to see what you have in favor of the trade. But where the real key is to spotting low probability and to understanding if price might do something else than what you expect it to do is by understanding what price is not doing in your favor. So is price telling you something that it might want to do the opposite of what you expected? So I always look, when I look at a trade ID, I look for reasons as to why I don't want to take the trade. Not why I do want to take the trade, why I don't want to take the trade. And if there's no reason as to why I don't want to take the trade, then there are only reasons as to why I do want to take the trade. So then I take the trade, if that makes sense. And that is quite important, because some people might only look at, okay, what do I have in favor of my trade right there? So only looking at reasons as to why I do want to take a trade, then you forget about the reasons as to why I don't want to trade. So you get blinded by price simply telling you it might want to do something else than what you expect it to do, if that makes sense. That is very important to understand, if that makes sense. It's true power moves. That is true. That is true. Thank you. Thank you, Gotta United. Thank you. Thank you. Hello, Kai. Welcome. I hope you learned something. Welcome, welcome, welcome. If your YouTube content is enough, or what do you talk about taking the masterclass mentorship? YouTube is enough. Yeah, YouTube is enough. But the reason why we also then have a mentorship, if YouTube is enough, is because mentorship, we take you by the hand. So what I mean by that is, for example, if you join the masterclass, the steps are exactly outlined on what you should do and what struggles you are going to run into, etc., and how to overcome them. So it's essentially YouTube, but it's fully aligned with how to actually implement everything, etc., etc. So YouTube is a little bit all over the place. You one week have a concept there, then the other week you have a concept there. Masterclass, you have support members that help you out. You have exact steps that you should take and how to implement the concepts where, etc., etc. So I always like to call it, it's a shortcut. That's what you pay for. It's a shortcut to understand it faster, to shorten the learning curve. If that makes sense. Thank you, White Will. Thank you, thank you, thank you. Thank you. Hello, Santosh. Hello, hello, hello. I've never used EMA indicators, actually. I've never used them in my trading journey. No. No. I've never really used indicators in general in my trading journey. No. Hello, Wreck-It Rolf. New subscriber. Welcome, my friend. Welcome, welcome, welcome. No, 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 no. That's actually, Deepak, you're on a roll today with the suggestions. That's actually something I was thinking about. Yeah, actually something I was thinking about. Sort of scholarships could be a very, very interesting idea, actually. Yeah, I was thinking about that. It's very interesting. You're you're doing great with suggestions. Keep them coming, my friend. Keep them coming. But yeah, that's a good one. Good one. Why should I choose ICT and not another technical school or concept? You do you, my friend. I couldn't really care. I also don't trade. Well, of course, some things, arguably the fair value gap. But if you think this is ICT, what you're looking at, then you've never seen an ICT video. And believe me, that's coming from someone that has watched a lot of ICT videos. ICT doesn't explain the concepts nowhere nearly the way we do it. And that's nothing against ICT. People make ICT work as well. But it's always quite funny to me that people think this is ICT. This is not ICT. This is not ICT. But again, what I said is I couldn't really care what concepts you use. People get a large amount of payouts with support and resistance because it resonates with them. People use indicators successfully. Be my guest. Be my guest. Whatever resonates with you, I think that's the concept you should choose. And if that's MMT, if that's something else, then that's perfectly fine. That's perfectly fine. Hello, brother. I wanted to join Discord, but have been banned automatically after I changed my name on the server. Please, can you add me again? My Discord name is Sangaro. Can you reach out to email right here? info@ario.io right there. Yeah, you can reach out, or it doesn't really matter. It goes to the same address, but info@tradingmt.com. Reach out to those emails right there, and we can take a look. Usually, when you get banned automatically, we have in the public community, we have something in place where if your name is a little bit too close to Ario or something like that, or another support member, the server might ban you automatically. But of course, that can also sometimes be wrong. So if you do get banned automatically and you think it's not fair, then of course, feel free to reach out right there. Or in general, if you get banned and you think it's not fair, then feel free to reach out. We can take a look. How can we find out which currency is comparatively strong? That's a good question. It's in the price action itself. It's in the technical analysis itself. So if you take a look at AU and compare it to EU right there, then what do you see? You see, first of all, that AU created more bearish fair value gaps right there. You see that EU only had one bearish fair value gap right there. And afterwards, also on the 4 hour, for example, if you compare the 4 hour right here, there's a lot of an easier path to move higher right there. So overall, the chart itself already tells you which currency is weaker, which currency is stronger in the short term at that moment in time. But just simply looking at the fair value gaps, compare the price action, etc., etc. Can I only use fair value gaps and be profitable? Yep. Yeah. Of course. I think we need to be somewhat nuanced about that. As in, there's nuances about fair value gaps that I think you should learn if you do want to use fair value gaps profitably, if that makes sense. So to say anyone can come in and just learn about a fair value gap and all of a sudden be magically profitable, no, I don't think that. But that's the same as in taking a fair value area, for example. Can you take fair value area and be profitable with it? Yeah, 100%. But there are some nuances that you will learn about fair value areas that will then lead you to the profitability, if that makes sense. Yeah, you can take a look at crosses. I'm going to take it quite easy in the coming week, as in my expectation is quite low. You can potentially take a look at the crosses, but keep in mind, we don't have a lot of volatility coming in for the crosses right here. So it can be a little bit more tricky right there. So start paying attention to a potential consolidation. If we do create consolidations, etc., you might want to just take a step back and leave this week for what it is, if that makes sense. If you see context area on the 1 hour and 1 hour time frame is forming a respect candle, and then you drop to the 50 minute and saw a sharp turn, we wait for the 1 hour respect candle to close before we enter. That completely depends on your trading plan, first of all. But not necessarily. If your trading plan is 1 hour for value area, 50-minute sharp turn from that, then that's perfectly fine already. That's perfectly fine. What if 1 to 2 is outside of our context areas? Good question, Andrea. Can we mark out the body of the swing point we are using as a stop loss? Yes, for sure. You can refine it a little bit, try to refine your stop loss, but don't over refine it. So find a balance in that as well. Over refining your stop loss, of course, is not always beneficial and might just lead to a missed winner sometimes. Next to that, if it's outside of 1 to 2, outside of the context area, you're 1 to 2, make sure you're at least break even when we do reach the context area. What a lot of people don't understand is context areas are crucial. And the reason why context areas are crucial is because context areas are to a certain degree a given. So what I mean by that is when we reach, for example, this right here, fair value gap, what is the context area? This is your context high right there. So this is your main target. This is where you stop looking for entries until you have new context. That's because even if we are going to continue lower, I need you to understand this to the core. Even if we are going to continue lower, we are very likely to sweep this high right there to then continue lower from it. If we are going to continue higher, then what are we likely to do? We're likely to run this high to continue higher. If we are going to consolidate, we are likely to reach this high and also consolidate right there. So reaching the context high is to a certain degree a given. Because even if we are going to continue lower, we're going to sweep it to then continue lower from it. But what I need you to understand that after reaching this high, it's not a high probability anymore, because if we are going to continue lower, we are at that moment going to sweep it to continue lower, or we might run it, or we might consolidate. So we go from one option, which is reaching this high, to 3 different options, if that makes sense, on what all things can happen right there. So it's quite important. So the context area right there, if we do reach it, you ideally want to be somewhat break even as well, if that makes sense. When trading the 4 hour and the 1 hour, do I still need to take a look out for time? And if I do, how? No, not necessarily. Just make sure you watch out for market rollover and understand the news events that we are looking at. I think you're at the the wrong address. Or it might be the first live stream ever you've watched right here, but the question is, tell me how to find an ascending and descending trend line is going to change. Yeah, I'm sorry, I'm not trying to make fun of you, but maybe first I would advise watch a few videos of the channel and then come back asking questions. Or if you want to learn about trend lines, then this is not the channel to be at. And there's no shame in that, but then this is not it. This is not it. Am I supposed to avoid all high impact news, or should I embrace them? No, not avoid all of them. No. Of course, depends on the context. If you're about to enter a 1 minute time frame entry, for example, and you're 1 minute ahead of PPI, yeah, be a bit more careful. But if you're a 50-minute trader, for example, it's a whole different story. On average, so if you're looking for 50-minute entries, for example, then on average, you only want to avoid the big 3 news events. That is CPI, that is NFP, which is on a Friday, not the one on Wednesday. You have NFP right there, and you have FOMC statement. Those are the ones you want to avoid. The rest, like retail sales, things like that, you can enter before, during, or after, depending, of course, on your prop firm, what it also tells you. All right, team. Thank you, everyone, for being here. I am already going to end it. It's a little bit shorter today. I want to push out more videos. Thank you, everyone, for being here. I appreciate it a lot. Have a great Sunday, or if it's already Monday for you, sleep well. Take care. Remember what we talked about. Again, don't rush to get involved out of CPI, I would argue. Take your time. Take your time. Better safe than sorry. All right. Thank you, everyone. Have a great rest of your Sunday. Perfect. Thank you. The topic of the new video is fair value gaps. What a surprise. But it's a little bit of a longer video, actually. So it's going to be quite interesting. All right.